Well, hi there, everyone, and welcome to the VIP Trade Room with Roger Scott and Matt Horton. Today is Thursday, December 4th, and my name is Raleigh White, and I'm coming to you live from a chilly, rainy day here in Austin, Texas. But you know what? We never complain about rain here in Central Texas. It's always good. Anyway, I'm going to be your moderator today, and in today's session, Roger's going to be covering a range of important topics with a specific focus on using the A line for swing trades. Now, in this session, he's going to talk about why an A line is a go to setup for swing trading. He's going to talk about which indicators help isolate the perfect A line, how the anchored VWAP also helps confirm strong setups. He's going to show us how he uses the A line to the long side and to the short side, and how the profit target is automatically built into every A line. And then finally, folks, he's going to talk about which options are best for A line opportunities, whether those are calls, whether those are puts, whether those are credit spreads or debit spreads. So we got a great session all lined up for you. Now, if you've got any questions during Roger's presentation, please type them in the chat window and we'll address them periodically throughout the session so as to not interfere with Roger's presentation. And remember, folks, that the chat is open to everyone, but we do have some ground rules. Number one, always be kind and supportive in your posts. Number two, please keep to the topic. Number three, no political discussions allowed whatsoever. And also, folks, just keep your side conversations to a bare minimum so that the rest of us can focus on the education and the information that Roger's going to be sharing, because after all, he's taking time out of his day to give us an edge in the market and to help us all become more confident and consistent in our trading activities. Now, for those of you that were with us this morning at 8 a.m. Eastern Time for Roger's pre-market briefing, you'll note that there were several catalysts that we need to be aware of today. With regard to the Magnificent Seven, we noted that Meta came into the open down about 1%. But interestingly enough, during the session, it really bounced back. And as a matter of fact, helped lead things a little higher. On the tech front, we noted that Salesforce CRM was up 1% coming into the open. On the retail front, we knew that Kroger and Dollar General were all going to be releasing earnings before the market open. On the consumer front, we knew that Hormel was also planning to go ahead and release their earnings before market opened. In Japan, the Nikkei was up 2% and at 3-week highs. And on the Fed front, we had jobless claims that were released that came out really surprisingly slow. But anyway, those were the key catalysts. And for those of you that wonder, well, why do we even talk about these catalysts? What are we supposed to do with this? Well, Roger always maintains that information on critical companies or events that are either known or will be known during the trading day, but are not yet priced into the market, those are things that we need to be aware of, because each one of these catalysts represents a point of volatility. And as such, we need to be aware of it and be careful when we look to take trades around these particular volatility points. Now, as it relates to the small cap watch list, we only saw 3 tickers today that were interesting: INLF, CBIO, and PMI. And let me go ahead and let's switch to my charts, and we could take a look and see how those small caps have performed so far on the day. And as you can see, I'm only showing 3 charts at this point in time, but at a glance, we can see that there's really nothing to write home about. In the upper left-hand corner, INLF, the pre-market high, or Rogers target, was 85 cents. So we were hoping that the market would open and prices would shoot up into 85, give us our fill, and move at least 15% in our direction, but no luck. It's been sitting right here around 63, 65 cents all morning. You can see volume is declining, nothing there. The next chart over is CBIO, and this was a small cap, a little bit on the expensive side. This was $22.75. That was our target. We opened up here at about 15.56, dropped down here to about 12 and a half bucks, and we have just been sitting here all morning on declining volume. I don't expect we're going to see any action on this today. And finally, over here we have PMI. Our target there was $3.65. It opened up here at 257, dropped down to 224, has climbed up to basically where it opened. We see the volume is declining, so I don't expect any activity here. So we had three that we looked at today, folks, but no hit on those. And before I leave the small caps, I just want to share with everybody that Roger's selection process, it basically focuses on price action for the small cap, but really primarily he looks at extreme volume. He wants to see volume in pre-market trading that's almost 100 times what the normal volume is for this small cap stock to be considered. He also likes to remind us all that small caps are an animal all their own. Once again, the only people that are investing in them are retail traders like ourselves. You're not going to see institutions or hedge funds putting money into small caps. That's not what they do. Also, folks, if you consider any of these small caps for trading, only trade them during the market hours. And if you don't have a fill before 2 p.m. Eastern time, just take the trade off. It's not worth the risk. And if you are filled, never hold these trades overnight. Also, it's not worth the risk. Now, when taking a look at Roger's large cap stocks, you can see there were 25 stocks that he gave us today, 12 shorts and 13 longs. Now, on the short side, you'll see that there are 3 stocks here that have asterisks near them, and that tells us that these are good A-line setups, and we're going to be talking a lot more about A-lines in today's VIP session. The one thing of note here is on Microsoft. He said, yes, this is on my short list, but this is so close to the 200-day moving average, he would not really consider taking a short on it, but it was an A-line setup sitting above the 200-day moving average. On the long side, once again, we had 13 stocks there. And for those of you that are new to this, or you're not familiar with Roger's watch list, these are, tickers that he is taking a hard look at. And if any of these ticker symbols meet his qualifications or specifications for what he'd like to trade, more often than not, they're going to be shared in the trading pit or in any of Roger's other premium alert services that he has. But these are legitimate tickers that he has on his watch list to the short side and the long side. Now, as far as Roger's pre-market closing comments are concerned, we did notice that the markets were pretty flat and basically doing nothing at all as we opened up our session at 8 o'clock this morning Eastern time. We noted that the put to call ratio was basically in balance and slightly favoring the calls. We also noted that the VIX had bottomed out right at around 16, well below that 20 level. He also shared that the sector rotation was really looking good, favoring those interest-sensitive speculative stocks, and that momentum was picking up in the broader market as more stocks were making highs on a 1-month and on a 3-month basis. He also shared that the SPY, the QQQ, and the MAGs were all still sitting there right below major resistance, just kind of consolidating there, waiting for an excuse or a catalyst to help them punch higher. But he did say, guys, we have to be careful here because the bonds are at the low end of their range, just sitting at key support. And he says bonds are the things that we really have to keep an eye on because that's going to be the motor that's going to drive the market either up or down. And it's just sitting there at the bottom of his range. Did things look good for him today? He said, absolutely. Things are looking good, but I am going to keep eyes on bonds and I am going to watch the ADD, the advance and decline on his internal internal dashboard to see if the market opens with the ADD above 1,000 to give him a little bit more, if you will, confidence in the fact that the markets are likely to bounce a bit higher. So that's where we were today. Those were his pre-market closing comments, and he's certainly going to update us on all that as we get into the meat of today's VIP session. Also, folks, once again, delighted to have you here. As a reminder, we've got a great agenda on tap, and the focus is going to be on the A line. And Roger's going to talk about why the A line, once again, is basically his go-to setup for looking at swing trading opportunities. He's also going to share with us the indicators that help to isolate the perfect A line. He's going to tell us how the anchored VWAP helps confirm strong setups. He's going to show us how he uses the A line to the long side and also to the short side, and how the profit target is built into every A line. And finally, folks, he's going to talk about the options which are best suited for A line opportunities, whether they're calls or whether they're puts or debit or credit spreads. And finally, folks, if you've got any questions during Roger's presentation, please type them in the chat window, and we'll address these periodically throughout the session so as to not interfere with his presentation. Also, folks, remember that the chat is open to everyone, and we have some ground rules. Always be kind and supportive in your posts. Number two, please keep to the topic. Number three, no political discussions allowed whatsoever. Also, folks, just keep your side conversations and chit chat to a minimum. So that enables the rest of us to focus on what Roger is sharing with us, because think about it. He's taking time out of his very busy day to give us an edge in the market and to help us all become much more confident and consistent in our trading activities. And with that, let's say hi to Matt. Let's say hi to Roger. Guys, it's great to see you. How you doing? Matt, how things going with you today?
It's going great, actually, but there's nobody posted anything in the Telegram channel letting us know that we're about to start. Hold on, let me take care of that right now.
All right. That's a
Yeah,
crime. That's a crime
yeah,
right
yeah.
there. That's a major crime. We're going to have to root out the cause of that, Roger.
Exactly.
You
It must
know,
be
and
Clyde's fault.
I think, I think Clyde was jealous because you featured Bonnie this morning and decided at this point he's just going to pull the telegram.
And you know what I'll do right now? I'll go ahead and send one right now, like I do in the morning. 1 second here. I mean, we have over 100 people, but somebody forgot to send an update. It's amazing. It really is blows my mind away. Hold on a second, folks. Uh, 1 second.
Anyway, it's good. While Roger takes care of that, guys, it's good to see everybody here today. Once again, we have an awesome session lined up for you today.
We do.
We've had good sessions all this week, and Roger, the feedback has been amazing. And what I mean by that is it's always popular. It's always fantastic when you basically, show how you use the tools that you've created to trade the markets, and you take the time to painstakingly go through that and share how that's done.
Yeah. So I just posted one. Let me just repost another one. And I was trying to break it down. I think sometimes I assume that folks know too much, so I gloss over the little things.
Yeah.
Join
And
lesson.
Roger, and that's a natural thing. Once again, twice a day, you're with the world, if you will, sharing what you see in the markets and what you like and what you do, et cetera. And that's day in and day out, day in and day out. And I could see where it'd be easy to understand, well, the whole world knows what I do. You know, I don't have to explain these things, but we have new
Yeah,
people coming in all the time, Roger. And I would
right.
imagine if you're first time in the room here, you're like, whoa, what's going on here? You know? And it takes a minute to go ahead and get comfortable with things. But so it's great that you do that. Hey, I see some great comments here in the chat. A number of people chiming in with Cam and Gustavo and Customer Live and getting their questions answered. And of course, they do a fabulous job there. And I think this week, Roger, they've been focusing on TradingView.
Yes,
Just sharing with
yes.
people how to leverage TradingView, because not everything is only on Thinkorswim. We have TradingView, we have TradeStation for a number of our applications. They do a fantastic job.
They absolutely do. All right, now you guys got my undivided attention. Sorry about that. Weird. Yeah, that's usually somebody sends it out, but they didn't
I
send
tell
it
you
out
what, buddy,
today.
I'll just make a note of that, Roger, and maybe I'll take over that responsibility just so
That
that,
would be fantastic because I
so
know
that
it'll
we
get
do
done
that.
if you take over that responsibility. Then we
Yeah.
won't have any issues.
Any
Because you
issues
and I
there?
put so much energy and effort into this. We want as many people here, obviously, as
Hmm.
possible. Goes without saying.
Absolutely.
All right, how are you doing today, my friend? Are you doing good? Everything's good in
Everything's good
Texas?
here. And like I told people, it's a cold, rainy day here, but man, anytime we get rain here, Roger, it's a blessing. So bring it on. You But it's a nice, it's kind of a gray, overcast day, but it's a nice day to be indoor, focused on doing things, focused on the markets. By the way, the three small cap tickers, none of them look like they're going to even come close to those levels. They opened up and then they both dropped. Volume is just dropping off. And I just shared that with the folks that were here before you came on. So good entry signals there. Really like the overnight volume, but hasn't even approached those levels.
Yeah, didn't even approach those levels. All right, all right. Good to know. Good to know. Yeah, here we're getting a little of a cold spill as well. It's getting a little chilly here today. You could see I'm wearing a jacket, something I usually don't do. Matt, on the other hand, wears his shorts. Go figure. I think if they moved me to a cold climate, I would freeze or something. I don't know. I
I,
don't know how you guys do it. I don't
you
know. Like it
know,
gets.
my
I just.
wife is from New York and I'm from
Yeah.
the Washington D.C. area. So, that's not like Minnesota or Wisconsin. We are used to four seasons, but when we moved down here to Austin, man, that first summer was like, my God, we're just going to melt. But you know what happens, Roger? I think your blood thins out. And you
Yeah.
get used to it. And
Yeah.
now it gets like into the 60s, and I'm like grabbing sweaters. And of course, everybody here in the room up north is laughing. One of the
Hmm.
guys here, Tim, was telling me it's minus 2 degrees F where he is in Wisconsin. And that is, Roger, to your point, I'd basically say, Tim, it's time for you to move south, buddy, or at least consider that for the winter season.
Yeah.
And we've got people living in Arizona, obviously, that the weather is all over the place. But I hear you, Roger. Once the blood thins out, man, you cannot handle the cold.
Yeah. Right. It's very, very and absolutely very, very true. Very, 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 very true. Yeah, and I just can't handle it. I don't know how people do it. I really don't. All right, let's get into today's class and let's have some fun. But yeah, they got to start posting our alerts here. All right, let me take over my screen and let me. Here's my screen. And just to show you the market today, this is the market today. I mean, I don't know if you guys can make heads or tails out of this. You're a better trader than I am because to me this just looks like a bunch of garbage. This looks like uh this looks like garbage trading action. To me, I like what I'm seeing on the daily. This is looking great, okay? But I don't like this intraday price action. So
Intraday, yeah.
I'm just kind of holding off and just biding my time. I want to take a trade. I want to do another trade in the pit, but I want to give people something worth taking, and I want to see if I could find a couple of swing trades. But I'm going to wait towards the end of the day.
I think that's
Clyde is
smart,
CC.
Roger, because that's a buzz saw right there. That
Mm-hmm.
is. Yep.
You really, I mean, you can't trade this effect. It's very hard to trade this effectively. It really is like a drunk raccoon. Never heard that before, but
No, no,
yeah,
Roger,
yeah, it
that's
sounds.
I read an article about that. Apparently, some raccoon got into like a liquor store and they found him drunk and passed out, in the bathroom. I think I got that right, but it was, that I don't know where it was, but I think that's the thing. It really happened yesterday. Anyway,
That's that's the
I
funniest.
digress.
That's the funniest thing I've heard in a very long time.
Christopher
That's
says that was him in his raccoon costume. Anyway,
you get,
everybody here has a wonderful sense of humor. I didn't mean to digress, but I did crack up when I read that yesterday.
that's too funny. That's really really funny. All right, so folks, today I want to talk about my favorite pattern, and I get a smile on my face because every time I teach this class, and I usually do it on the Saturdays. Actually, I don't know why we scheduled it for today, but it's fine. It's good. And whenever I teach this class, I get very excited. And the reason I get very excited is because it's a very simple pattern and it has a very high degree of uh, it, how can I explain this? Ease of use and deliverability versus learning. There's a very good ratio of that. In other words, it's not like Elliott waves where you have to take an engineering course for 4 years and then maybe you'll be able to figure it out. It's not like that at all. It's really, really straightforward. And I'm going to show you. I'm going to show you this pattern. I'm going to teach you how to use it, and then I'm going to give you a course on it and test you. How does that sound? Does that sound
Man,
reasonable?
better be paying attention. That's what I'm hearing.
Exactly, exactly. So let me go ahead and just get my agenda. I wrote it out this morning and I just want to put it out here. Oh, here it is. I'm on there right now. And by the way, this is the featured trader today, just so you guys know. This is the guy that's running the show today. All right. He's gonna risk it for a biscuit. All right. That's pay attention to that. All right. That's Bonnie. And yes, Bonnie is a male cat. That's right. He's not a female. He's a male cat. There's a story behind it, but I'm not allowed to say it's a little delicate. All right. So, folks, overall, what is this pattern called? The pattern is called the A line. Okay, it's my favorite pattern for swing trading, and I use it for setting up. And I use it for setting up. I use it for setting up day trades as well. Now, I'm going to show you how to isolate the A line, and I'm going to show you how to make sure it's a good A line, and then I'm going to show you some stocks to use with the A line. So, um, the first thing the first thing you need, and a lot of folks don't realize that, the first thing you need is you need a slope. You got to have a slope. If you don't have a slope, you're not working with anything. Let me give you an example of what I'm talking about. Okay. So my Picasso drawings, right? So you can have a market like this, and then a stock. When I say market stock, I mean it interchangeably because I trade indexes as well. So what I'm talking about is you got a market like this. Okay, it's moving, it's moving, it's moving, it's moving, and then it breaks out. That's not an A line. Yeah, you got a slope here, but you've got no slope over here. Okay, that's a consolidation and a breakout. That's not a slope. Here's what a slope looks like. Yeah, slope is slope it to a line. You want stocks that are moving at a certain degree, okay? At a certain degree. Now, there's no hard and fast rules, but I want to see a slope. I'll give you some ideas and I'll give you a mechanical way of finding it in a minute. But you need to have some type of a slope in the stock. Um, is this good enough? This is good enough. This is good enough. This is not, I don't want that. I don't want a slope like this. I want something gentle like this. And I'm going to show you in a minute how to find it and how to identify it, okay? So you definitely want the stock to have a natural slope. Now, if you're trading to the upside, you want a slope like this. If you're trading to the downside, you want a slope like this. Now, this is optimal, obviously. You're never going to get optimal, but you're going to get really good sometimes. So again, the best way to tell, take your monitor, put it across your room and see if you could see a slope. If you can't see a slope in the trend, you don't have a slope. That's how they would do it in the old days. I wouldn't even say 30 degrees, Hal. I would say anywhere from 15 to 25 degrees would be optimal, okay? So anything from this to something like that would be optimal, right? 20% is ideal. 20%, all right? 20% is this is the ideal what we want. We want a slope. We want a stock that's already moving. Okay. We want a stock that's already moving. Okay. We don't want a stock that just started moving. We want a stock that's already moving. So let's look at this stock, for example. Not bad. Probably about especially right here. This is good. This gets a little bit far. This is about as high up as we would want it. Right here. Okay. We don't want anything too much above this. This is a really good stock. No, thank you, Richie. I appreciate it.
And Roger, a lot of people will ask us about a slope. You're typically looking at a daily about 3 months, right?
Yeah, I'm looking at a daily and I'm looking about 3 to 6 months.
Yeah,
Yeah, three to
because
six
if
months.
you compress things, guys, your slope's going to go way up. So you
Yeah,
want to
yeah,
be looking at about 3 to 6 months out when you look at that slope. Right. Yep.
exactly. Something like this,
Hmm.
something like that, something like that. You don't want to go too crunchy like that, and you don't want to go, you're not micro. Just a regular, I think how I have it set on my bar chart, I have it to 4 months.
Hmm.
So I think I have it to 4 months. And again, we don't want to get too far into the weeds, but Raleigh, I never thought about it, but you're right. If you squish it too much, it gets too elongated.
Yeah, and some people will go like, yeah, yeah, and we're like, that's
Yeah.
why it's good to have that 3 to 4 months as a
No,
reference.
you're absolutely you're 100% right. So again, and folks, this is not a hard and fast rule, but what we definitely want a stock that has this type of, a nice clean price action. This has very, very clean price action. Okay. Okay. So let me just erase all this. Okay. And I'm actually looking to go long this stock. Just again, FYI, just for full disclosure, right now, it's on my watch list. So, very nice stock. What we don't want is a stock that is just here. We don't want a stock that we don't want a stock that does this. We don't want a stock that is doing this. We want a nice, smooth, smooth, smooth slope like that. It's all we want. Okay. This is rule number one. If you don't have a slope, you don't have anything. Okay. Now, a lot of people have asked me, Roger, what about volume? I don't look at volume for this strategy. Oh, what? You don't look at volume? What do you mean you don't look at volume? Volume is like the biggest thing you look at. How do you not look at volume? Well, let me explain. Volume is like relative strength. It's a cycle. It goes like this. Volume comes in and out of a stock, comes in and out of a stock, comes in and out of a stock. Up, low, just like relative strength, just like sector rotations, right? It goes like this. It doesn't go like this for 8 months, not anymore. It goes in and out, in and out, in and out, in and out. Somebody presses volume on the gas pedal and they let go. Let go. So when we're swing trading, as long as we have healthy volume and as long as it's steady, I'm okay with it. Remember, we're trading large cap stocks. Okay? We're trading large cap stocks. Today's not David's talking about diagonals. That's tomorrow. Tomorrow's Friday. Today's not Friday.
Yeah, guys, let's keep it
Yeah,
focused on what
yeah,
Roger's got going on here. Keep that side chatter to a minimum, please.
yeah. So let's continue this. Now, okay. So now the next thing you want is you got to have the slope, which means you don't want price action to be like, let me see if I could find something. You don't want it to be like this. Well, Roger, why not? It's not that bad. Look how gappy it is. Look at all these gaps. This is an ADR. You don't want ADRs that gap. Very gappy. It's not choppy, but it's gappy. Um, you don't want something that looks like this, where it's gaps, chops, goes up. It's very non-fluid. You don't want something non-fluid. Okay. Let's see. This is about as choppy as you want to get right here. That's about as choppy as you want to get. Okay. You don't want to get any more choppier than this. So it's still moving in a nice channel, but it's got those ups and downs, ups and downs. Okay. Let's see. That's a very nice clean trend. See how it doesn't go up and down within its price range? Very, very nice. Very, very nice price action. Okay. Very, very nice price action. You want me to look at BBOI, Omar? Let's see. Yeah, it's beautiful. That's a very nice price action. Very predictable price action. Okay. Very predictable versus something like, or how about this to the downside? I was looking at this to the downside. Now, this is a little too slopey. It's a little too slopey. This is starting to look good right here. This is a little too much to the downside. This is looking good right here. The recent price action is getting to right to our threshold. This is a little too much, but this is good. But again, price. You see how price doesn't go up and down within the price range. It just stays. It's very, very good. Uh, uh, and again, volume is not a problem. And if you guys have a problem with liquidity, for example, and if it's still a large cap stocks and you really like it, just do the underlying. Just do the underlying. It's really, really simple. Okay.
So
Let's
did
see if
you
I
all
could find.
understand what Roger just said there? When he said do the underlying, just buy the stock.
Yeah, just buy the stock. Just buy the stock. Now, you see this price action? You see this price action? You don't want price action that looks like this. Okay. You don't want price action that looks like that. All right. This is a little better, right? A little bit better than what we just saw. That's price action right there. Okay. Just to kind of give you some examples of what good price action looks like and what really bad price action looks like. So this is really bad price action. You see, let me explain to you why. Okay. Let me explain to you why. One second here. Okay. Because if I buy here and I'm wrong, I get suckered into this big drawdown. If I buy here and I'm wrong, I get suckered into this big drawdown. If I buy here and I'm wrong, I get suckered into this big drawdown. Okay. Look at Ross Store. Let's say I buy right here. Not that big of a drawdown. Let's say I buy right here. Not that big of a drawdown. Let's say I buy right here. Not that big of a drawdown if I'm swing trading it. So my point here is you see how price within the channel, it doesn't go up and down a lot. It just stays very fluid and moves directionally. That's the kind of price action you want to see. You don't want to see you don't want to see price action like this because you get suckered in. Now, if you're a position trader, and you're going to be holding a stock for 6 months to a year and you don't care, this means nothing. But if you're trying to swing trade this, you're asking for trouble. You're asking for a lot of unpredictability. Oh, that's a nice one right there. That's really nice. Yeah, that's. You know what? If you guys want to nibble at something, this is a good day trade to nibble on right now. By the way, it's an A line to the downside. Um, yeah, if you guys want to do a short here, this is a good short with a profit target right here. Okay, just FYI. All right. Okay. So two things we've covered, right? We've covered the slope, right? The slope. We covered the quality of the trend. We don't want a stock that we don't want a stock that's doing this. Again, if you're trading, if you're planning on holding for more than 2-3 weeks, knock yourself out. Knock yourself out. But if you're swing trading like and you're holding up to 10 days, that's a bad. You're asking for trouble. You're really asking for trouble. Okay. All right. What time is it? We have time. All right. Next. So, okay, now let's say we don't have a choppy stock. We have a pretty clean stock, right? That's a choppy stock. Let's find a good clean stock. It's still choppy. That's a very clean stock. That's a very clean stock. So let's say we have a nice clean stock like General Motors, for example, okay? And it doesn't have look at okay, so look here. Here's a perfect example. Let's say I enter right here and the trade goes against me. How much am I going to be down before it starts coming back up again? How long am I going to be underwater before it takes me back up? With a stock like this, it's not going to be very long. I mean, look, we don't know. When I say it's not very long, I'm going based on the historic propensity of the stock. Okay. All right. But anything can happen. I mean, this stock here could be the big winner, right? And um, General Motors can be the big loser. We don't know, but I'm telling you, probability wise, that if you get stuck in this stock here, you have a much higher likelihood of bouncing back alive than if you were in a stock like this. And if you guys don't understand what I'm saying, stop using indicators. If you understand what I'm saying, you can use indicators. But if you can't see the difference between this stock and this stock, please do yourself a favor and get rid of every indicator on your chart, because you have a severe problem seeing price action and reading price action. Okay.
Hey, Roger, just real quickly here, a number of people were wondering before you go further on that short that you were looking at. You said, "Hey guys, I want to give you a nibble." Was that PDD that you were talking about?
Yeah, it was this stock right here. It keeps going down. Yeah. Yep. This is the stock I gave them about 5 10 minutes, about five
Yeah,
minutes ago.
exactly. You said, "Hey, if this is something that you want to nibble on," several people were sitting here going like, "Well, what was that again or whatnot?"
Yeah,
And I
this
was
is the
actually answering somebody else and I
yeah, it's a
forgot to
short.
write it down. It's a
It's a nice
short
short.
on PDD. Okay, thank you,
It's a
buddy.
nice short. It's a nice A line to the down. I think I said that. It's a nice A line to the downside.
Yeah,
Yeah.
somebody just missed it. Okay.
Yeah. Yeah. Anyways. Yeah. And you could see the American flag is here and it tried to reach the 200 and now it's bouncing off and it's not looking all that great. And it looks like it wants to go down some more. You know
Hmm.
what? I'm going to give it as a quick bonus trade in the pit real quick.
So this is a good A line to the short side, folks. And once again, we're going to be talking about the A line a lot more today and what it is and why it's so important on long and on short trades.
Okay, there you go. I just wanted to give it to folks in the room as a bonus trade. Okay, so now, so you understand the stock has to have a nice clean slope. The stock has to not look like this. It can't look like this. Okay, can't look like this. We don't want it to look like that at all. Okay, we want it to look uh, like this, clean, not a lot of choppiness within it. Okay. Now, once we're done with that, once you can find that, you start looking at your indicators. Okay. So the next thing is how deviated is the stock? How deviated is the stock from the 8-day EMA? Very, very important. How deviated is the stock from the 8-day EMA? See, a lot of folks think that the A line is just it's just some indicator I use.
Right.
No,
Mm-mm.
no, no. It's a combination of several, and they all have to jive together and create synergy, which is what I keep telling people. But they're looking for that one magical indicator. Okay. Uh, Cyrus, you think GM is a good short? Cyrus, do you generally believe, do you really, after being here every day for 7 years, you believe that GM is a good short? Okay. Uh, okay. Uh, it, it it's going straight up on a 5 minute, and it's
Yeah.
going straight up. All right, Cyrus. Every institution right now disagree with you, but okay, whatever floats your boat. Maybe we're
And the
getting
people
back
in
to
the room here are having an intervention, right,
maybe
Cyrus? No.
maybe this is the Cyrus that was here 7 years ago. All right, Cyrus, whatever you say. I do not agree with any of that advice. I would not give that advice for 1 second. And Cyrus completely disagree. This is a beautiful long stock right here. Okay, let's continue. But whatever you say, Cyrus. Who am I to argue with you? Okay, so the new Cyrus, the old Cyrus, Bob. That's how he was 7 years ago. Ugh, Cyrus. All right. So the next thing is we need to make sure the stock is not too deviated from the 8-day EMA. And there's two tools. There's two tools we could use. There's two tools we could use to determine that. Okay. One tool is very, very easy to use. It's the right here, the 10-day ATR. See how it's at $1.56? All you got to do is look at the low, current price, or the low of the day. So let's just 74.90. Where's the 8-day EMA at? The 8-day EMA is at 73.50, and this is at 74.90. So it's right about one ATR above us. It's not good. So this would not work. We want a stock. We want a stock that is like this. So this is a little too late to be an A line. Now, let me show you what a nice A line looks like. That's what a nice A line looks like. This is what a kosher A line looks like. You see how it's right at the 8-day EMA? Right?
Mm-hmm. You got plenty of headroom. Yep.
You got a lot of upside. That's an A line right there. You got the slope. You have the nice, hardly any back and forth. Look how well, when we visually back test, that's your next step, visual back testing, right? Visual back testing. Thank God, Cyrus. I thought that we'd have to send what do they call it? What's that guy?
EMS.
Rehab trader. No. The trader. I thought we'd have to put you in trading rehab, Cyrus. Trading rehab. Trading rehab. Sometimes I feel like putting myself there, and sometimes I feel like putting Matt there. But I think today we got to put intervention. Yes, intervention. All right, we're doing good on time, actually. So visual back test. So look at how many things we've covered already. You got to have a nice slope. You got to have price that's not moving. And by the way, everything I'm talking about right now applies to just about every swing trading strategy. Okay, which is why I love this program so much, because it takes everything I know and puts it together. So we have a nice clean move. Our slope is not overextended. Price is not overextended from that slope. Okay. Price is not overextended from that slope. And we then go back to the 8-day EMA and visually back test to see, is it keying off the 15 or the 8? Yeah, it is. It's not really, look, since October, it's been pretty much above the 8-day EMA. That's a very, very attractive chart. Wouldn't you agree, Matt?
Yeah. It looks real nice.
Yeah. Are you long right now?
We are.
Are you still long that
We're
position?
still long that position.
Oh my God. How long have you been long this position?
Since like this morning.
Their options are going to be worth nothing by the time they're
I'm
done.
tracking that too.
All right. I could have taken a nap by now and he still would have been in that position. All right. So we need to make sure that it follows like this, the 8 line. This is a perfect setup. Now we've identified the perfect setup. How do we apply the options to it? Right? Oh. One last thing. I got to put a cherry on top. One last thing we need to do. So the A line, and I write this down. A perfect A line is a stock that comes off as a pullback from the most recent swing high. Actually, I think that's the first thing I've ever taught Matt. It's a pullback from the most recent swing high. See how we have a swing high and now we're pulling back? So let me show you something here. The stock has been going straight up nonstop. Okay, so here. Okay, this is perfect example. I love when a plan comes together. Gus, don't ruin it for all of us. You don't ruin the surprise. It's okay, Gus. This is not a quiz. You're doing a great job. Thank you for posting it. This is how well I've trained people. They know exactly what I'm going to talk about next. I love it. I love this. Gus, this is the best compliment you can give me. All right. Let's continue. Let's continue here. So you see how this high is lower than this high? This high is lower than this high. I would not trust a pullback from this level. Okay? But I would trust a pullback from this level. Which is right here. But I wouldn't trust a pullback from this level. I want the pullback to be from a swing high. It doesn't have to be an all-time high. It just has to be the swing high. Wherever we are in the chain of events, it has to be a swing high. So, now why do we need it? Well, that's just part of the definition, but there's another reason for it, and Gus here spilled the beans ahead of time. But that's okay. This just tells me I've been doing a great job of training people. Look at the anchored VWAP. We put the anchored VWAP all the way to the upper bar. Okay? Hey guys, and gals, is this educational? Are you guys getting value out of this? Are you guys getting some value out of this? Talk about crappy price action in the market right now. Look at this. Good. Okay.
Consensus is good, Raj.
Okay. Good. Thanks, Hopiumatic. Thank you, guys. So you see how we put you need a higher high before going in, because you're going in on a breakout of the pullback back in the so this is the high, this is the test, and this is the pullback back when it's trading above these levels right here, which it is right now, or almost is. So we want to put an anchored VWAP at the close of the previous high and make sure that price action is above that level. Why? Because that means that anybody who's buying here is now back at profit right here. The average buyers at this price level are now back in profit. That means the equilibrium is coming back towards the buy side. And your profit target is really easy here. It's the previous high, or the standard deviation, which should be just a hair above this high, which it is right here. I'll get to your email in a minute, Richie. As soon as I'm done with all this, I'll check it. But and that, my friends, is a real nice. So let's just check something real quick. What was that trade that I? It was PDD. Right, PDD. So here's PDD on a 5-minute chart. What time did I give it to you guys? I gave it at 12:30. At 12:30, right here. So it was It was somewhere right here, about 515. It was a little bit higher than it is right now. It's kind of breaking down right now, as you could see. Let's just see something here. Yep. See that? See that right there? And theoretically, your profit target is somewhere right here. Okay? So now the next question is, so let's just review for a quick second. So let's just review for a very quick second here. Real quick. You need to have a slope. You got to have a slope. You got to have a nice slope. This is a beauty. Folks, about 2 years ago, GE, this stock right here, and Matt will tell you all about it. Like here and right here, Matt, here, right there. You see this, guys, right here? See this run right here? Do yourself a favor. Go to, if you guys have all access in my all access, do yourself a favor and look at how many times we hit GE in 2024 and look at our accuracy on GE. And I'm not talking about one service. I'm talking about across several services. Matt, how many trades do you think we gave on GE? 5, 6?
More than, no,
10?
probably 25.
20?
Wow.
Hey, why
Why
not,
not?
right?
Yeah.
Look at the trend. Look at this trend. Look how well it respects the price action. You understand? So all right. So you see how it slopes? Nice clean slope. You see how price barely, look, when it goes up, it just stays up. It doesn't even retrace. Now look at this price action, okay? And look at this price action right here. Hold on. Remember, this is a new stock. It didn't trade here. Look at this. Can't compare, can you? Or IBB now, can't compare. Bob says, yeah, around 20 or so. 18 trades, all for me, all win, Omar says. There you go. So I'm not joking around when I'm not exaggerating. I really am trying to tell you exactly what we did. One thing about me, I'm not going to lie to you and give you some theories. I'm going to tell you stuff based on actual things that we've been doing for years and years and years and years and years, like as far back as I can remember years, okay? And this whole thing about profitable strategies stop working after some time. I've been using the same strategies for 30 years, and they work just as well now as they did 30 years ago. Okay. All right. So nice slope, no jaggedness, right? We don't want a stock that's overextended from the 8-day EMA. And we want a stock that has a nice anchored VWAP and the head, the hammer, the not the wick, but the price action currently is above that stock. I got to tell you, this looks like about as perfect one as you can find. As perfect one as you could find. And by the way, we just closed the trade in the pit on this stock. I think it was yesterday. I'm not sure. I think it was yesterday. I don't know. So that's what takes to set up the perfect A line. Then once you have the perfect A line, you start bringing options into it. Okay? You start bringing whether you're going to do a call, are you going to do a put? That's easy to decide. Are you going to do a debit spread or are you going to do a credit spread? Because you could do a credit spread against these two. For example, I could do a bull put spread right here. But, right here, assuming this is going to go up, I could do a bull spread right here and it will decay in value as the price goes up. Or I could do a debit spread, or I could just buy a call option. The world is my oyster. Tomorrow, since we're getting into the end of the session, tomorrow, and I still haven't given you my watch list stocks. I'm going to give you my stocks picks for the day right now. I'm going to give you my watch list right now. Matt, can you hook me up?
Yep.
Thank you. Are you still in that trade?
Yep.
He's going to be in this trade all day.
Well,
Clyde is going to.
Gold is just going up and up and up and
Yeah,
up.
no, I'm not. I'm just messing around. Clyde is going to turn into a Rip Van Winkle. Okay. And by the way, one of the things I love about the market right now, look at IWM.
Yeah.
Nice, right? Small caps, interest
Small
rates,
caps doing
interest
well.
rates,
Yeah. Interest rates.
interest
sensitive,
rates, interest rates, interest rates, and more interest rates. I'm going to be adding this. So just so you guys know, I currently have a screen where I just have this. I have SMH, I have RSP, I have MAGS and QQQ. Matt is going to add another column for me. Thank you. Add another column here for me, and I'm going to add IWM, and I'm going to add the Dow. So we're going to have 6 columns here. So we're going to have SMH, we're going to have RSP, we're going to have QQQ, MAGS, we're going to then have small caps and the Dow. So just so if you see it next time, you heard what I just said, Matt? To my sheet that has 4, I need you to add the Dow and make it 6 out of 4, and add kind of like what you did here with the market internals.
Yep.
I need you to do the same thing here with this sheet, and add the Dow and the Russell 2000 to it. Probably take you 10 seconds to do that. Okay.
Yep.
You don't have to do it now. Whenever you have a moment.
Yep.
Yeah, or it should just add, you're just adding 2 columns to your sheet. It's not a big deal. Okay, so I like what I'm seeing on IWM right now. Now let me go ahead and give you my stocks, and then I want to do the full A-line presentation for people who are serious about the A-line, who want to incorporate it into their trading.
And you were also, Roger, you're right on the cusp of talking about options.
Yes, well, I don't want to get into options now. I want to spend a bunch of time on it. So what I'm going to do now is
brother.
I'm going to go through my watch list. I'm going to ask you if there's any questions about the topics that we've covered. Actually, why don't we first find out if there's any topics that, any questions on topics that we've covered that I might have missed. And then I'll give you my watch list, and then I'll do a presentation on the A-line for those who liked what I saw, who are really serious about it, and who want to incorporate it into their trading and who want to learn more about it, because I'll give several examples. So let me know, are there any questions that I can answer for you guys?
I was basically, once again, I think people have just paying rapt attention to what you've got going on. You did a nice job multiple times, Roger, reminding us of what you covered. Okay. And then, when you brought in the anchored VWAP, a lot of, ahas came there. There's some questions about the anchored VWAP. How is it? How do you use it? How do you apply it to your charts? But it became very, very clear that that's the cherry on the top, in my opinion, was where price action is above or below. If you're shorting the anchored VWAP, that's cool.
Yes. So for example, to give you an example, here's the Russell 2000. Pretend this didn't happen yet.
Yeah.
Pretend we're still here. Just pretend, okay? Here's the swing high, right? It's the highest high, or there, looks like it's definitely a higher high right there. And here we're breaking down, we're breaking down. So if we were looking for an A-line, we would be buying right here. Well, we wouldn't be buying right here because the 50-day moving average is right here. We would be literally buying right here on this bar right here. And there's, it's funny. I don't know right now. I'll probably find it, but there's a stock on my watch list. Well, we're going to go through my watch list right now, but there's a stock on my watch list that actually is doing exactly that right now, coming from the high all the way down and crossing through the 50-day moving average, and it's probably above the VWAP. So I like the VWAP, but I would never ever trade a stock below the 50-day moving average. So if I was looking at this as a stock, I would wait for it to cross the VWAP and the 50-day, which would put it right here. This would be and I know this is hindsight 2020 nonsense, but I'm just explaining, and I don't play that game. But I'm just trying to demonstrate to you where I would put it at the previous high. And if this high was higher than this high, I wouldn't be putting anything here, and I wouldn't be looking at this till it took out the high and made a higher high. Do you guys understand? So let's see if I could, let me look at my watch list. This is actually my watch list that's current for right now. Okay. So this is a lower high than that, right? So here, you can see it right here. This would be your, right here. It already passed the 50 to the downside. Here's your AVWAP. And there's your entry right here. right there would be your entry. It's still a good trade. It's just not an A line right now. It's a little overextended. But again, just wanted to show it to you. ABT. Nice short to the downside. Philip Morris. That's about as pretty as pretty's going to get, guys. Yeah, the whitest high volume candles. That's a really nice looking pullback stock right there. Okay. By the way, what was that ticker I gave you guys? It was PDD.
PDD.
Yeah, how's it doing? Just kind of sitting there, huh? Coming off. Okay, all right. That's next on my watch list, by the way. PDD, very nice. And you could see it right there. See, that's the low, that's the A line, and that's right here. And it should theoretically come down over the next couple of days down to here and test the bottom. Slowly doing its job. That's fine. V, another stock. It's an A line right now. Let's see. Bingo. Right here. Okay, I'm giving you guys red. This is all red meat, by the way. That's a beautiful A line right there. That's a very nice A line. Let's see. Yep. I love this. Look, the VWAP and the 8-day intersected right at the same time. Now,
Right
you
at
know
the
right
same
there.
point,
That's
yeah.
a very nice. It's a very and look at volume around here. It's moving up. That's a very nice A line. That's a very nice A line right there. It's a high probability trade right here, if I've ever seen one. Yeah, it's very, very nice. And folks, I just want you to know I'm not here to give you trades. I'm here to teach you and to give you watch lists. Okay. And all my rules for options apply. The same ones I've been giving you every single day for 8 years now. The same ones apply. No difference here. YMUC. This is not a beginner's trade. This is more of an experienced trade because you're not below the American flag, so you won't have as much staying power. But I think this has a profit target of here. I wouldn't do this if you're a beginner. Dasmanic 38, this is not live. No. This is pre-recorded from 2 weeks ago. Do you see my screen, the dates, all that, the time tickers in real time? I mean, of course this is in real time. That's a very nice setup. You know, today's date, the time right here, 12:54:53, literally. Yeah, that's a very nice short. I got to tell you, I'm giving you guys like really nice red meat. It's the future. There you go, Omar. It's the future. You don't want to do the stock till it breaks below. Forget about CVS. I should have been more careful. That's my negligence right there. And that's the second stock. Now, the stock is so nice, I added it to my watch list twice. I'm not kidding. I'm not kidding. I liked it so much that I added it to my watch list twice.
There you go. That's a dead giveaway right there.
Oh, it's okay. This is not the pit, Phil. This is VIP room.
This is the VIP
We're not in the
room.
pit.
Yep.
This is not the pit.
And Roger, once again, bunch of questions here, just real quickly. On the VWAP here, are you using the yearly and the quarterly VWAP? You're plotting both of those or just the quarterly?
On these charts, I don't have the quarterly or the yearly, but I do on my bar charts, and I should have them here. I just don't because I don't need them here because I usually get my levels in the morning.
Yes, I got you, brother.
So to answer your question, you got me. You're right. I should have the quarterly and the annual here, but I don't. I have it on my bar chart, which is right here. So if we were to look at this, what was the stock we were looking at?
PDD?
No, we were looking at this stock right here.
Oh, Weyerhaeuser.
So here you could see this is the quarter, and this is the year to date.
Year to date. And then, guys, when he was using the anchor, he was either looking at the swing high or the swing low, depending on whether you're looking to go long or short.
That's exactly right. That's exactly what I was doing. That's exactly what I'm doing. Right? And look at this is a beautiful A line to the downside. I've given you guys like 7 really nice. I mean, honestly, I went out of my way to give you some beautiful stocks today. like this one. Uh, no, that wasn't. There was a couple of that were just no. There was a couple. Shaq was very nice, and V was very nice, and this one is just a beauty. That's a beauty right there. And what was the other one? The other one that we took was PDD. Now, by the way, just out of curiosity, how different does PDD look to this?
Pretty similar.
Yeah, that's the point. That's
Yeah,
why
I
we're
mean,
short.
seriously, yeah.
That's why we're short this stock. Yeah, exactly. That's exactly it. But they're beauties. They're beauty. They really are. I mean, and folks, here's the thing. If we lose money on these trades, they're going to be just as nice of trades. You understand? It's not whether you make money or lose money. It's whether you follow directions and whether you keep finding stocks like this. Because I'm going to tell you something. If you do 1,000 trades like this, like following these rules, I guarantee you will make money. And I don't say that word very lightly. You know why? Because you're shorting a stock that's breaking lows in a strong downtrend after it already broke and tested the VWAP. Of course it's going to make you money because you're following statistical rules. You're following a simple edge. And if you keep buying stock, if you keep selling the weakest stocks in the right time, you will make money. And if you keep buying the strongest stocks, you keep buying stocks like this, you will make money. See, look, you do 1,000 trades that look like this to the long side, and you do 1,000 trades that do like this to the short side, and you tell me if you come out ahead or not.
Excellent, Roger. And I just want to let people know as we're getting ready to transition to another part of this presentation is that for those of you that want to have like an instant replay of this, okay, just go to Roger's YouTube channel. It's there, it's in real time, and you can replay this. Because for those of you that are asking questions about what was that symbol, what was this, it's just rather than Roger and I spending time re-explaining it, you're better off just watching the replay, and you get it right there on the YouTube channel.
I also need to do my longs.
Yes.
So Google, our friend Google. Hey, look, we're above this level. What do you know? How about IBB? Don't they look the same right now? They do. How about ASTS? That's the stock that I was talking about. Raleigh, remember I was saying something looks like, I was showing you an example of IWM, of Russell 2000,
yeah.
and I was saying how so this would be that example right here.
Okay.
And by the way, let's just try something here. I don't know if this will work, but I want to try. Yep. Here's the VWAP at the previous high. That means right now, everybody who bought here all the way through on average, they're not losing money anymore. Remember that IWM example I was giving you, and I was saying if we went back in time, I would have bought it right here when it's crossing the 50-day because it's above the VWAP and the 50-day. Well, that's what this is right there. It's on my watch list. I'm giving it to you for free. Teradyne. That's beyond. So the VWAP, the A line would have been right here. Look, right here. Now it's a breakout. Now it's a good day trading stock, but it doesn't have any volume. All right. CCJ. Again, same thing as before. Same breaking the 50-day. It's very nice. Look how attractive this is. See that?
It's that magic indicator, Roger.
Yep. That's a nice A line right there. I wanted to pick specifically a lot of stocks that had A lines in them today to reward you guys for being here and to give you some red meat. That's an A line right there with volume. Well, not a lot of volume actually, but it looks like it's got volume, but it actually doesn't. But the day's not over yet. Beam. That wasn't. Remember, this is what all those two stocks I just gave you yesterday look like, and that's what I'm hoping they will look like the next day. That's a very nice, attractive stock right there. This stock is being accumulated by institutions right now. There's no question about that. You don't need to be an Einstein. You don't need the magic indicator to figure out Richie's favorite stock. Here's Richie's favorite stock. He loves this stock. Okay. And EXPD. I'm giving you guys really nice stocks today. These are all of the stocks on my pit long watch list. That's a beautiful, beautiful. Now look at this. It's a breakout, but look how close it is to the 8-day EMA. It's not overextended. It consolidates, it keeps flagging. I like this. I like this. I like this. Does that here, breaks out. Does that here, breaks out. I like this. I don't know what Adam says. Google came back. You have to sit tight, selling panic. Yep. Birthday girl, Penny's here. Previous one you gave is giving an entry right now. Which one, Richard? Tell me which one you're talking about. I'll look it up again. And then IBB. IBB looks really good. Oh, VKTX. Yep. Let's see. It sure is. It's coming back up right now. All these stocks are really hot right now. Okay. So, folks, I gave you a piece of myself today, literally. I'm giving you guys like I'm trying to earn my keep around here. I'm afraid I'm going to be replaced by Clyde. People really love those pictures of him, and he's cuter than me too. All right, folks. So now that I explained that to you, I'm going to give you a class. I'm going to give you a class that shows you what we've been able to achieve with his tail is furrier than mine, and the ladies like him more than me. What can I tell you? He's Clyde. All right.
His tail is furrier.
His tail is furrier than mine. You know, what am I going to tell you?
My gosh, Roger. That's
Listen, I got it.
I'm trying to get rid of that image.